Joining me now, Michael Schumacher is head of macro strategy at Wells Fargo, and John Augustine is chief investment officer at Huntington Private Bank. Welcome to you both. John, even Chair Powell doesn't really use the term transitory anymore, but obviously some of those big contributors, especially on used car prices, may moderate somewhat. Other factors are just starting to pick up now, though.
No, you're right, Kelly, and good afternoon. This report was actually, by the way, before a lot of the commodity increase that we saw out of the Russia invasion. So what's actually going to be more interesting is on Monday, that producer price index. So we're probably going to see a higher inflation print before it moves lower. That's our view. What does it mean for your investing strategy? We're sticking with our inflation hedges. So last year, middle of the year, we started with real estate, small caps, then in the bond portfolios, TIPS, those Treasury inflation protected securities. What we saw last year was gold. We had gold at one time. It just didn't work. So we exited that position. Real estate, small caps. Did you mention a third and you said you got out of gold, but are you getting back in now? Not getting back in. The third was in our bond portfolios. We put TIPS in there. Those Treasury inflation protected. Absolutely. All right. So you're already kind of positioning for this kind of environment. Michael Schumacher, you know the CPI report, the way the bond market usually reacts better than anyone. 10-year back over 2%, but we're off the highs of the session, I believe.
Yeah, it's interesting, Kelly. You've got so many crosswinds now with Ukraine, inflation, et cetera, the Fed right around the corner. So difficult to pin the move on any one particular factor, but we do think the trend for the next few months is up in yields at this point. Okay, trend up in yields. I think everyone could get on board with that, Michael. But is the real story that today basically, puts more weight into the inflation camp than into the slowing growth camp? Look what the ECB just decided. What do you think that significance is? Yeah, that was interesting, actually. It's a good point. The ECB was comparatively hawkish. You'd think, well, hey, you've got a shooting war just outside the Eurozone's borders. Surely the ECB is going to be dovish, and it really wasn't. So they talked about ending bond purchases pretty soon, which is not what the market expected. I think the inflation report for the U.S. today just underscores the idea that inflation's here to stay for quite some time. It's not going away anytime soon. Yes, you're going to see additional pressure upward, especially this month from the surge in commodity prices. It makes the Fed's job that much tougher, but it really does put the onus squarely on inflation and much less on growth.